Once again, this is Life Chat with Vivandvil. We are still continuing our conversation in regards to finances this month, and we have our final guest with us today. And y'all, I hope I don't mess up your name. I hope that's exactly what it is, because I always have an issue with your name. But we're so excited to have you here with us today. And we want you to introduce yourself to our audience and let them know a little bit about yourself and what you do and so forth.
Okay, first and foremost, thank you for giving me the opportunity to be on the platform. Like Vivian said, my name is Yao Boache Widya. I'm an accountant at a bank called UMB Fund Services in Kansas City. And my position is I'm an accountant. We do back office work for hedge fund clients. These are your clients that are looking for alternative investments in terms of hedge funds and private equity. So we basically do the accounting work. We don't necessarily give any investment advice, but we do deal with producing the profit and loss on the investments and report it for them on a periodic basis, whether it be monthly or quarterly. So I've been at that bank for about 9 years now. I do enjoy what I'm doing. It's very related to some personal finance that people do in terms of budgeting and forecasting. So there are some things you can take from it to apply to your personal life. So it does give me a good balance, from a personal and a career perspective.
Thank you. Welcome. Welcome.
Thank you.
Yeah. So when you say forecasting and budgeting, what exactly are you saying? What does it mean for forecasting when it comes to a person? You said a personal investment, or is this company-wide investment?
Yeah. So these are basically company-wide investments. So what I mean by forecasting, that would be your personally your budget. So what we have expense reconciliation responsibilities that we have for some of the funds that we service. So we look at to make sure that we're within line of allocating enough, money or balances to different expenses that we have to pay in the funds. So some of the funds have audits that they have to pay. They have to pay us, which is the admin fees that they pay. So in a sense, what we do is we forecast for the whole year, which would be January all the way through December. And then from a personal standpoint, if you are building a budget for yourself, you want to do the same thing. You want to start from the beginning of the year to the end so you get to see the whole picture and to make sure that you're allocating your necessary expenses to each category accordingly.
Mm-hmm. So are you proposing that the budget, when we do our personal budget, that we do one for over a year, or do we go month to month?
So you can go about it one of two ways. Some individuals like it, broken down little by little. So you can do month to month. I personally do month to month. And of course, I've been doing it for a while, so I kind of know what to expect. Then there are others who like to see the big picture from the beginning. Then you do it, throughout the whole year, so what you're working with entirely, and that way you keep yourself in line. But if you're a beginner and you don't want to get lost in the weeds, you can do it month by month, so it's not too tasking on what you're doing.
Right. And when we make a budget, explain to our listening audience what are the things that we need to make sure is in the budget, because most times we tend to forget little things and they add up after a while, and we are wondering, why can't I balance my budget?
Yeah, so the first thing you want to do is you do want to be not fearful of putting everything down. So the first thing about it is there's two meanings to fear. Fear is either you face everything and run, or you face everything and rise. So you want to put
I love that.
Yeah, so you want to put everything down and make sure you don't think of it emotionally, but logically. So everything that you're spending on, whether it be, TV expenses, food, even miscellaneous things, should be included, because it's basically your financial health on paper. And the best notion of health, or the best notion of wealth, is health. If you're not healthy, you can't be wealthy. So you want to put everything down that you're spending on, even if you don't like it. It gives you a better picture, and you can accurately know what is going on, so you're not surprised at the end of the day. So whatever expenses you have, from your utilities, rent, mortgage, cell phone, car insurance, even if you're going on a trip, you want to add that in the budget as well, because you want to know, what am I going to expense over the period of time. So when you come back home, you look at your account and there's something to smile when you come back from your vacation.
And what percentage? I know we had a former guest who says that we should put away 10% of our income towards savings to ourselves. What would you say? Do you agree with the 10% or?
Yes, I'll agree with the 10%, but I think for any, depending on the audience, young or old, it's always important to save as much as you can. 10% is the rule of thumb that you can put away. So for example, let's say, and savings comes in different forms. So if you're working, and let's say you're contributing to a retirement account, for example, if you get promoted, you know, increase your contribution rate. That's another form of savings. If you get an annual increase, you know, increase your rate again. That's another form of savings. So even before that disposable income comes in, you can save the 10%, but you can also save at the gross rate when you have any, bonuses or whatever. Put your bonus away if you can, when they give you opportunity, if you do get a bonus, that is. So those are different techniques you can use if you do have that kind of thing. And then on top of the 10%, I would say diversification. You know, um, there are different savings accounts out there. Some of them, depending on the interest rate, of course, because the Fed has slashed interest rates, so you're not getting too much. But there's also mutual funds that are out there that help. Index funds are another good place to save. So if you have just a little bit extra on that 10%, you can put it in those funds and be as diverse as you can.
Thank you. That's pretty good. That's pretty good. So I'm gonna go back to what you mentioned about, your budget. And I think one of the important things is not just to make the budget and look at it, but you follow the budget.
Right.
Because a lot of times it looks pretty, you put it up, I've made the budget, but you're not following it. And you're not going back at the end of the month to see, where did I go wrong? Where did I under budget? What areas did I under budget? And what areas did I over budget? So you can have a more balanced thing. What's your opinion on that?
Yeah, so sometimes, budgeting can be a little bit of a tough responsibility to have. So, sometimes what's important is, talk to other people who are budgeting. Think of it like, going to the gym. If you have a group of you who are, gymming, or you're meeting up every so often, let the budget be a conversation of interest in your daily undertakings with some of your friends, because it makes it easier. We're not in the race alone, walking to, financial freedom. So, involve yourself with people who are doing like things like you. I mean, I know people who do couponing. There's a couponing group. There's a budget group. So, create that so it keeps you on task. And at the end of the day, it also pushes you to go further. Because, I remember when I was in college, we used to compete with people who were like in science, other majors, for, who's going to get a 4.0. Well, regardless of whether, nursing was harder than business, the fact of the matter is the goal is to get those grades. And in this case, surround yourself with people who are, who want to, save money and live a better life, and that will help you keep on track, individually and personally as well.
That's very good advice, because iron sharpens iron. It's another way,
Yeah, basically, yeah, there you go. Yeah.
right? And in my country, they would say birds of a feather flock together.
All together. Yep, yep,
Right.
yep.
So absolutely, that is so good, so good. Um,
Yeah, and now if a person now saying, okay, I don't really have people who think like me, and I don't really have, I want to get out of debt. I want to able to start a budget. What would be the first thing you tell them to do? I don't have people around me who's thinking the same way. My finances is a mess. where would you tell them to start first?
So the first thing I would say is how dedicated are you to the goal of getting rid of the debt? That's one thing you have to look at. Is you've lived this long or however period of time, nothing is changing. But if you move into something, giving yourself a time frame, right? So if you have, let's say you want to save maybe $1,000, you save, okay, for the first 6 months, let me focus on saving. And then if you have debt, then the rest of the 6 months, let me allocate it to some, different pieces of debt, or the tiniest one or something. But the most important thing is to get going, get on the bike. Otherwise, if you don't get on, you're not going to get anywhere. And you have to not think of it as something spectacular. I mean, saving is a good thing in general, but it's not something, because you don't have a business background, or you're not good with money in the beginning, doesn't mean you can't be good with money in the end. It's all about starting, putting yourself, you get yourself organized, put things together, and then just get to work and roll up your sleeves.
Good. Are there any particular tools? For example, I know of there is this budgeting tool called Every Dollar. I think is the name of it. Or what are some tools that you recommend that our audience could use to help them make this budget and mention every area or account for every area of their life where they
Yeah.
spend?
So yeah, there are a lot of apps out there, and different things people can use, like you just mentioned, everyday dollar. And there are a lot of I know personal bank accounts that do also offer budgeting services as well, that are free. But you can't go wrong with using an Excel sheet. And the reason why I say that is, when you personally write these things down, it's like a personal love letter, right? When you put it down on paper, you see it firsthand, and it's right in front of you, telling you, look, yeah, what you're doing or what you need to do is this. Sometimes when you're using an app, it's good because someone else is doing it for you. You may not get to see essentially what needs to be done. So before you actually go into the app, if you can get on Excel. If you can't get on Excel, maybe put it on Word. But interact. This is probably a good time to get one-on-one with your finances, and maybe even learn Excel if you don't know it. So that way it's right there in front of you. Then if you want, you can move to the everyday dollar and all those automatic apps out there. But I would suggest that put it down on paper. That's probably the best thing you can do before you outsource it to another entity to take over for you.
I like how you said it's a love letter, because I guess you could tell you're a rural accountant because you love those things. But all of us don't like doing all that stuff. So it's not a love letter to us, but we want to get there.
Right.
Yeah. So with individuals who basically now they have a budget, they structure themselves to um, they have like, basically the banks don't give you that much interest, so therefore you want to move on to investments, and therefore to get a better, what do you call it,
Return
nest
on
egg,
investment.
whatever you call it. So, what would you tell those individuals? I know you do investments also. So, from the point when you budget and then you move in now to the investment, what would you say they should look for? And how much do you think they should be saving or whatever to get a better nest egg?
So the next step after establishing your personal savings account, another investment would be mutual funds, or which come in different forms. They're basically portfolios of different stocks and bonds and short-term interests and all those different things. So they are good in a sense that they are not expensive to invest in. So if you wanted to put in about 5K, 10,000 to start off, and it doesn't necessarily have to be that amount, but I would say if the budget allows for an extra cushion, because the budget is the one that's going to let you know what extra you have to put away on top of the 10% or so that you're putting away. So the first one would be the mutual funds. I know a lot of people enjoy the stock market. I'm sure you've been hearing how the stock market's it's hot, but if you don't want the bouncing around of the stock market, mutual funds or index funds are pretty good investments. People have kind of retired early off index funds because they are less risky, and they help give you a good wide of diversification without having to be directly impacted by the stock market.
And what is mutual funds and in what's
In
the other one?
mutual
Index
funds
fund.
and index funds, yeah.
Index. I never heard of index funds. What was
Yeah,
it?
so mutual funds, what they are, a pool of think of it as a bunch of stocks in one portfolio or one fund. So you may have, say for example, like Netflix, Microsoft, you may have like a communication sector, you may have a banking sector, you may have finance, but they're all in one fund, and you buy the fund at one price, as opposed to buying a stock like Walmart, which is probably, I'm not sure how much. Let's say Intel, for example. A lot of people know Intel. It's $60 on the stock market right now. But if you go with a mutual fund, you can buy a wide array of stocks as opposed to just one. And some people do both. Some people have stocks, mutual funds, and then those who don't want the heartache of seeing the sinking up and down of like the chart going up and down, they'll go to index funds, which are safer because they just want to track a certain sector of the market and not have to see the bouncing around, when they look at their charts.
Mhm.
So that's another thing. And then of course, if you have retirement through your employer, or if you are, you're a business owner, you get an IRA or something, that's another place to put money as well.
Mhm. Yeah. So mutual funds, in other words, your funds are your investment is diversified.
Right.
And index fund, it's like a single entity.
Yeah. So they're a single entity, mostly tracking what you call the performance tick of certain stocks. So you're not necessarily invested in one particular stock, but you're invested in a particular sector that's tracking the market. So like the S&P 500 or any standard that's on the market, you're tracking that specifically without having too much exposure.
Mhm. Okay. Okay. Very good. Very good. Thank you.
No
So
problem.
I just want to go ask $1 million question. And why is finance so important
Well,
to understand, especially in this economy and especially as a minority group?
um, it's so in terms of that question, the thing about it is that finance has many grassroots. So, and some of it is also about passing of the knowledge, right?
Mhm.
It's more of like institutional knowledge or generational knowledge, should I say, of passing. So part of the issue is that if you don't see, like say your parents or older brother or sister acting on it, you won't know. And
Mhm.
if you're not told, it's not that you're being ignorant, but you just don't have any awareness of how to go about doing certain things within finance. And again, sometimes it's not romantic, right? Even though I say there's no romance without finance, it's not a romantic thing to do if you're not in the discipline, right? So it's all about passing the knowledge on. Um, when you look at the stock market on TV, it's just so many different numbers on the TV. They're saying so many different things, and you probably need someone or some form of medium to break it down so it's a little bit less complicated. Because of course, it gets a bit complicated as time goes by, but it's also the way it's communicated or how it's transmitted to people, that it's like, oh, it's too much, I can't do this. So it's always good to have somebody who's a mediator who can break it down or find form or some sort of literature that makes it easier to understand. So when you hear it, you can process it a little bit better. And then, of course, as time has gone by, we do have, you know, more information in terms of the internet. You do have a lot of like a podcast like this is helpful because, you know, people are looking for alternative ways to get information easier and more clearer, right? So, you know, there are different podcasts out there, including this one, that does break it down so you're like, oh, you know what, that's kind of interesting the way he or she, broke it down for me.
Mm-hmm.
So, I mean, me personally, I had parents who I won't say they taught me directly, but they acted upon it. You know, they did certain things where I'm like, you know what, even if I don't get an inheritance, I know what I'm striving to get because they have it. So, you know, parents, you know, brothers, sisters who are listening, you know, just, you know, walk and talk it. That's the best thing I can say is that, you know, you can pass knowledge directly and you can pass it indirectly because, you know, you have people watching you. So if you speak it, you know, people will hear it. If you act upon it, they will see it. And when you have the results, they'll believe it.
Mm, I like that. Very good. Thank you. Wow.
We've been learning a lot of different things when it comes to finances these days, this month. You
Yeah.
know, like you talking about the love affair. And I think our last person, she was like, you have no choice. You need to do this, you know,
Yeah.
and certain things like that when it comes to seeing people's view on how they view finances. Because you making it seem like it's a romantic thing and more a simple thing, and to learn it and to make it easy for yourself that you can understanding, which is good. And
Right.
I guess basically when we do come to the understanding of it, then we won't be fearful because a lot of us are fearful when it comes to finances.
Oh
We
yeah,
don't
yeah, yeah,
like
yeah.
that word finances or
Right, right.
finance, you know. It's something that we're afraid of. But what do you tell people when they're faced with that, when they say, you know, I don't want to deal with finances, I don't want to deal with budgeting, I don't want to have to do all of this stuff? What do you basically tell them besides it being a good thing?
Okay, well, I tell them that numbers are our friends. They're not they're not intended or created to hurt you. Um, it's a story that's being told live. One that when you look at it, it's something that is critical and it's essential, right, to your well-being. So I do understand that sometimes it is hard to engage with finance or budgeting, but it's not as bad. It's not as bad once you get the perspective correctly, right? Because sometimes it's like we throw all these things at people like, hey, you have to budget, you have to save money, all these different things. But when you give them the long term view of what you're doing, right? There's a big implication because what I personally do does affect my community. Because, for example, if I decide to open a business, right, I am helping not only myself, but I'm also helping people around me. So those who are seeing what I'm doing, and that comes from, of course, budgeting and all these different things. So it allows you to be expansive, to travel the world, influence other people. So it goes a long way from just being afraid of, I have to put this in place. But you do a lot of good from all these different things. And when you're living, well and beyond, within your means, you have a happier life as well, right? You wake up fresh, like the sunlight, even though it's cold outside, you just feel good. Your whole mood is quite different.
Mhm.
So, it's quite important that you have not only peace, but you have, just a peace of mind, which you can't place any value on at the end of the day. I don't think there's any investment that you could get that, once you have peace of mind, could say, yeah, it's a higher return than any investment out there that you could make.
Mhm. Mhm.
So yeah, I'll start off with peace of mind. If you
Peace
if
of
you want peace
mind.
of mind, that's what you have to engage in. That's what you have to invest in.
Okay. Okay. I hear you loud and clear. So, nowadays, most jobs, when you get employed, they do not offer much in terms of a 401k. And a number of jobs that are available are that the minority population find themselves having are jobs without benefits. So when you have a 401k, it helps you to save. What would you say to those who do not have that available for them?
So, and yeah, I know sometimes that can be rather a bit of an issue. But usually, what I suggest is there are companies out there that do offer uh, individual IRAs, Roth IRAs out there that they can get into.
Mhm.
That may not be provided by the employer. So the benefit about that is, you don't face the taxes because it's at the disposable level. So yep, get into companies that will be able to provide you with that. There are a couple out there. Sometimes even your local banks do have, or the bank that you're banking with do have provide individual retirement accounts that people can get into.
Mhm.
And just make sure it's well balanced in terms of allocation, which is another topic within a retirement plan.
Okay. And as you mentioned, the IRA, what's the difference between, and you could explain it for our audience, between a Roth IRA and a traditional IRA?
Yeah, so usually you have the option of having traditional Roth. One being that if you don't want, if you want to put as much money away as you can before the period of time where you can, take it out before retirement, you don't get any taxes taken out of it. So, like for mine, I do go with the regular one where you can put as much money as you want. It's tax free for now. And then there's also the option of the Roth where it gives you the opportunity to let the taxes come out, so you don't have to be double taxed in a sense, which might be more comfortable for some people. And then the others who just want to get that maximum benefit from the beginning. So either one is not. There's no harm in going with either one. It's just a question of what you are comfortable with at the moment. And for me personally, I just go with the one that I don't have to get taxed because I'll worry about it later. Just take up it now.
Okay. You cross that bridge when you get to it.
Yeah, when I get there, yeah. But more importantly, apart from the two differences, I will employ that depending on your retirement, there are different allocations that you need to go for in terms of what you're invested in to
Mhm.
get the maximum benefit. So please make sure that you are in an allocation that's aggressive enough between now, depending on, of course, your time frame between now and retirement. So that way you're not the gap between what you're going to get between now and when you retire is not too large, because there is a prediction of how much you get paid every month once you retire. So I'm at the most aggressive I can be
Mhm.
at the moment. Yes.
And when you were saying earlier in the beginning, we talked about forecasting. Now, is there a certain percentage by age that one should think about putting away um, for their retirement? I'd say between ages of 20 to 40, what percentage do you think of their income they should be thinking about putting away? That if they're retired 60, so 65, break it down a little bit. What do you think that they need to start putting away at specific ages to get where they want to be, or it just depends on the individual and what they want?
Yeah, so there are a few conditions that come into play with that. So usually we'll go by the age range you just gave. So investment of people are age 25, I believe 35 and 65. So when you are 25, 35, 40ish, first one, make sure you're taking advantage of the matching. That if your company is offering it, please take advantage of the match. Because that's money that you don't want to leave on the table, for one. And then depending on how much you want to start off with, because some places you have to put in, was it let's say 8% to get a 4% match. So probably you want to be at fixed by, start off with 10. But determining the rate is a little bit tricky. So usually what I say is, although it's a little bit challenging, right? Because you have to build it over time. So me personally speaking, I'm at 17% of my income, but that's because I've used certain techniques over the 8-9 year period of time I've been working. So anytime I got promoted, I increased my percentage. Anytime they gave us an annual increase, I increased my percentage. So any of those things you can do, but usually, and different articles will say different things, but you want to probably close to be double what you're making salary per se, and you also want to be diversified in your portfolio. So some of the techniques have to be built over time. You definitely don't want to be shortchanging yourself in your retirement. And of course, the only way to know that is if you sit down and actually review, how much you're putting in and what investments you're in. Because within the investments, you do have to portion different levels to it. So, which is another conversation to have, because it's a bit, it's a bit in depth in that point. But in terms of the allocation, you do want to put a good amount, take advantage of the match. I implore you, if you do get any raises or any promotions, please increase it by 1% so it becomes a habit. And then you won't be saying, well, I want that extra money in my paycheck, but the extra money goes a little bit longer or further when you put it in your retirement. So even that extra $20, $30, you're buying a little bit more in your retirement because it's based on net asset value. So yeah. So I know the technique works. I've seen it for myself. So other people, I've sat down with at work. I make sure our new people who come in, make sure they're allocated properly. They're doing the same thing I'm doing, and they see results. So I know it works for certain.
So to restate what you just said, let me make sure I understand. For every increase or bonus you get, you should increase your withholding or your contribution by 1%?
Yeah, by 1%.
Okay.
And the bonuses, if you do get bonuses, you can put that whole amount in your retirement because it gets taxed pretty heavily. So yeah, I would say always try, because you figure when you're aggressive and you're doing it, 5 years, you probably would have doubled, instead of, waiting 10%, probably goes to about, 12, 15%, rather than, waiting every 2 years or so. Every year it's going up. So it means you're putting a little bit more money in there, including the match that they're giving you.
Okay.
It helps. It helps a lot.
Okay. Yeah, that sounds pretty good. Sounds good. You have a question, Vivian? Look
I was
like
gonna
you have
ask
a
them.
question.
Well, I was gonna ask. So do you have like services that you offer? Is just basically what you tell people who come to you and ask you questions in regard to finances and investments, or do you have services that you do outside, or is it just your business to say your company that you work for?
No, I currently not yet. I want probably down the road, but just for now, I do, do help on the side, especially if people have questions about their retirement or, with what I know, and if not, I'll point them in the right direction. So I don't have yet personally. Hopefully soon. That's the next goal. But I mean, like I said before, it doesn't hurt to help others grow differently than they are used to. So because at the end of the day, finances are the bedrock of what we do. So that to eat, sleep, and enjoy life, personally speaking. So, but yeah, but not yet. Hopefully soon.
Okay. Are there classes like seminars or webinars or places where you could go and learn some financial techniques or get a basic understanding? Not to come out as an accountant, because I don't want to devalue what you do, because I know you have to go to school for it. Not to come out as somebody who is very versed, but versed enough so you have that working knowledge to adequately channel your resources, or even when you go to an accountant or a financial advisor, you are able to follow what he's telling you. You have heard those words before, so everything doesn't look like French or
Yes, yes.
Italian, so you have an understanding, oh, this is what he's saying. What do you recommend? Where could I go, or people like listening out there to you, where could they go to get the basic knowledge?
So I would suggest something that I use. There's a nice little show called Marketplace that comes on every, Monday through Friday. Uh, I think it's 6:30 on WHYY, but you can find it on iTunes or wherever you listen to your podcast. The good thing about Marketplace, it does break down a lot of things, and it also talks about what's happening in your local and you know local economy and internationally. And then they also have different topics apart from that Marketplace podcast as well that helps you understand what other people are going through, what they've done to overcome finance hardships and stuff like that. So I would suggest to start there because it's really helpful,
Mhm.
just to know what is going on in your own backyard and what's going on overseas. So that way you get acquainted with different things. And like I said, they break it down pretty well. Investopedia is another good place. I encourage people to sign up for they have what is called like a daily word of the day, which is related to finance. So they'll give you different terms, define it, very simple, very simple.
What is
It's
it
like
called?
Investopedia. It's a daily email alert that comes from investopedia.com. I can't remember exactly the name, but it gives you different terms of the day that you can learn.
Oh, okay.
Yeah.
That's
So,
good.
if there's why there's a recession, all these different things, different terms of assets and all these other stuff. Some are, some terms that are normally used every day that
Mhm.
you probably would hear, but may not necessarily know exactly how they play. But it breaks it down pretty well. So it's a pretty good email to get in your inbox and read.
Mhm. Mhm. That's very helpful. Thank you. Because sometimes when you are a novice, you are afraid of somebody knowing that you don't know, so you remain in ignorance,
Right.
and you only get deeper in debt rather than just face everything and rise.
Yeah, there you go.
You
Yeah.
face everything and run. You see, I was
Yes.
just
Yeah.
Yeah, we don't want anybody running. We want them rising. That's what we
rise. Good, good.
So, what would you say? Well, I guess we could wrap up here unless you have another question, Vilma. You have another question?
Um, Not exactly, but I can find. I want clarification. The marketplace on WHYY, which 6:30 to when?
Oh, 6:30 to 7 p.m. It's only about 28 minutes.
Okay, good.
Yeah. And they have, oh, and by the way, they have one in the morning as well. I think is it 6:50, 7:50, and you can always replay them, but those are the times that they come on. So
Okay.
yeah.
Yeah, that's good information. I didn't even know they had stuff like that.
Oh
Okay.
yeah, it's very you fall well, I don't want to say fall in love, but it's a good it's a good the fall in love is it's
You
a good
love
it's a
that
good
word, don't
yeah,
you?
that do it.
You love that word,
Yeah.
love.
No, but it's something good you enjoy. If you don't want the finance to hit you too hard, that's a good
Mhm.
place to go. I've been listening to it for years, so I definitely has definitely given me a lot of development over the years. So
Right.
I love listening.
There's a question that I have been meaning to ask our different contributors to the program, and it's about taking out things like insurance and whether it's life insurance or you know some other type of term life, and you have all those
The whole life, yeah, yeah,
life.
yeah.
What are your thoughts about that in terms of being financially ready or secure?
So the first thing, term life, there's term life and there's whole life. So the whole life basically has a savings element to it, and it's a little bit more expensive than term life. So, you know, at times when you're signing up for insurance or life insurance, should we say, has, different elements to it. Um, and then, of course, the rule of thumb is if you do have dependents, and not to say that if you don't have, you shouldn't get insurance, but if you do have dependents, you should go with term. To
Term
be honest,
life.
you should go with term. Yeah, I mean, of course, other people um, may look at it differently. The reason being is that whole life is based on a forecast of what the investment is going to return to you at a specific time. And of course, it has a savings portion to it. The only problem is that the premium is very expensive in comparison to term. The other issue is that no one can predict how an investment is going to go. So you will get, the person telling you that, by this age you get this amount because it's based on a schedule. And of course, the market does this and that, so it's not on a trajectory going up. So a lot of times the money that you're paying for the whole life is being eaten up by the fees, and of course that reduces kind of like your return in a sense. Of course, the money that you're building up, if you don't get to a certain age, you will lose a lot of money when you surrender the value of that policy. So for a family, essentially, term life is better, right? It's more cost effective.
Okay.
You know, you can, you can put investments in something else. You don't need to have whole life that has a savings portion. And of course, some whole life policies are a little bit more complicated than what I'm explaining. But you don't need anything you need to pay above a premium just to cover, your family with a term life, a term policy. So whole life is a little bit popular, but I would say term is more, is essential. It's probably the better option than whole life.
So what if you have that? Can you surrender the whole life and go to term, or it depends on the length of time you have it?
No, you can. The only issue is that whatever cash value you built, extraordinary fees will be taken out of it. That's the only problem. But you can switch. You can switch the policy to term if you have whole life. It is possible. It's just that you lose. If you have put in a significant amount of money, there's a good chance you may lose it in the end. And yeah, it's not as beneficial as it probably is described to be for what it's created for, should I say? Because you have other investments that you can go into, and you don't need a savings element in insurance and an insurance product.
Right.
It's more for preventative purposes than for a money, a cash flow. What do you call it? A cash flow opportunity.
Wonderful, wonderful.
Go ahead.
I've covered my questions. So for our audience out there, we have given you a lot this month, so much to think about. And one of the things that I have learned and that stands out to me is your age of retirement is not a fixed one. You can retire at any age if your investment is right. I love that. Vivian, over to you, my co-host.
Yeah.
She's just smiling.
Any final word, y'all, you would have for our audience that you think that we should, you would want to say, but you think that you didn't get a chance to say. Any final words?
Well, no, not necessarily. Just keep encouraged. Work with, teach one. What's that? Teach one, reach one, right? So we teach each other. We keep in the fight. There's always hope. The most important thing is to start. If you don't start, You know, it's like going to the gym. You have to be committed. You know, going to the gym is not going to make you healthy. So you need to go in there, get to work, roll up your sleeves, have the right tools, you know, have the right information, and don't be afraid to ask. I think one of the, you know, the things I've learned is you don't have to do things alone, but do ask when you're not sure, because the more time, you know, the more time that goes, right? You could have accomplished a lot more had you, you know, sought the help. And of course, platforms like this, which we appreciate a lot, is very, 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 very helpful. Can't emphasize that point any further. So we're grateful for platforms like these, and you know, people like you letting us and teaching us in a sense, so that way we can, you know, pass it on to each other.
Awesome. Well, thank you. We really appreciate you coming on
Yes.
and educating us on budgeting and investments and what the things that we should look for, and not to look at investment as the bad thing or a negative thing, but to look at it as a love affair, according to you. So, and then when you said about iron sharpens iron, that portion of money, you know, when you be around individuals that have the same mindset, that we can able to go around them to sharpen each other in growing in our finances, growing in having a better future. I really love that. That's really good. And I didn't even know about those other places that one can go, which I'm sure Vilma wrote them all down, the marketplace and the investment Expedia, right?
Investopedia, yep.
Expedia.
Yeah.
So we just really appreciate all the information that you've given us. And thank you once again for coming on the show. This is Life Chat with Viv and Bill. Oh, Vilma, do you want to tell them where they can reach us? I'm sorry, because I know that's your favorite part to do.
Oh,
Or they want to do it.
You go ahead. Go ahead.
Okay. Well, you can always reach us at all the podcast syndications there is, and also with Live Chat. Live Chat with Viv and Bill at gmail.com, and also our Facebook page, and also our YouTube channel. So we really appreciate you guys for listening, and really appreciate our guests for coming on this month on talking about finances. And this is Live Chat with Viv and Bill. Goodbye, everyone.
Bye.